Hello guys, Alex Fedotoff here. Today we have an amazing guest. We have Asher, co-founder of Uncapped, and was named Emerging Entrepreneur of the Year of 2017. He's led multiple startups and raised millions in capital from angels, venture capital, and crowdfunding. And Asher, probably you would be the best, to give intro of what Uncapped is, what your company does, and how it serves the entrepreneurs community.
Yeah, sure. Well, hey, Alex, thanks so much for having me. Really looking forward to the discussion. As you mentioned, I'm one of the co-founders of Uncapped, and what we're really passionate about is that founders shouldn't have to give away equity in order to fund their growth. So we provide fast, flexible funding to e-commerce businesses for marketing, inventory, or hiring. But the key thing is that we do it without personal guarantees or dilution. And yeah, my background, I guess, is in startups. This is the third business that I've started over the years. And the biggest problem I always faced was getting the funding that I needed. And just working with, hundreds of e-commerce founders, I've just seen how they've struggled too. So yeah, it's a dream to work on Uncapped. Every day I get to help other entrepreneurs get the funding that they need. And our first customers were also my friends. So from the start, we've really tried to create something that is actually really friendly, that's fast, fair, transparent. It's the product that I wish always existed. We're now in 22 countries, actually, including
Wow.
the US, UK, Germany, Poland, Spain. And yeah, we've just been growing exponentially, deploying hundreds of millions of dollars to e-commerce businesses.
Awesome, awesome. So how did this company start? So obviously you mentioned you've had other experiences with venture capital, with other kind of models of funding the business. So did you see these things that were broken in those type of relationships, or kind of what motivated you to start Uncapped?
Yeah, Uncapped is totally born out of the frustrations I faced when I was launching my first business. I started my first business back in 2003, and I was young and I was just trying to raise
You're
100K.
still young.
I'm still young. I got some gray hair now, so it's a little bit different, at least from back then. So yeah, when I was trying to raise that first 100K, I probably had 100 meetings and got 100 no's.
Wow.
And I didn't want to take financing from the banks because they all wanted personal guarantees.
Uh-huh.
And venture capital, it wasn't ideal either because I didn't have this track record. I didn't have connections or some warm introduction. And so I just repeatedly missed out on growth opportunities. And yeah, then when I was raising money for my second business, I thought, okay, I've got it all figured out now. And I ended up raising millions in venture capital money. But I also got terribly diluted.
Mm.
And I just started to realize that the options for me were really limited. And it was depressing. It was depressing to think that I could work so hard and then own so little of my company. And yeah,
Wow.
I noticed it wasn't just me. Most of my friends were entrepreneurs.
Uh-huh.
And it just was this obvious thing that, they're all left to basically choose between raising costly venture capital or burdening themselves with traditional debt. And so, yeah, I thought there must be a better way.
So you allow entrepreneurs to be to still stay pretty much bootstrapped, without having without giving away their equity, without giving away control of the company, and still being able to afford that growth because growth comes with capital.
Yeah, so we're a new way for founders to fund their growth. We provide as you said, equity and interest-free investments. It starts from 10K, goes up to 5 million. And we charge a flat 6% fee on the capital that we provide.
Uh-huh.
And businesses only repay the capital as they make revenue. So there's no set repayment date, no compounding interest, equity, or personal guarantees. There's also no pitching. So, I told you my story where, I was out pitching to all these folks and knocking on these doors, finally getting someone to say yes. But in our case, there's no business plans, there's no coffee meetups. And it really just means that as a founder, you can get back to growing your business.
How do you manage your risks in this case? Because let's say with some businesses and even with venture capital, I know 8 out of 10 businesses kind of go bust, right? I mean that's I don't know if that's accurate, but that's what I read and that's what I've heard many times. That's what they say. So how do you manage your risks as a company? Kind of because I mean you're providing tremendous service, amazing service, right? But also as a company, you have your risk. So how do you manage that? How do you evaluate it? From as a company?
Yeah, as you said, in venture capital, a VC needs basically one of their 10 deals to make it big. In our case, we want, 100% of the companies that we back to, keep working and pay us back, right? So it is a totally different game. And so we have to be really smart about, how we provide that capital and how we assess businesses. But we do it actually in a really smart way. So, we connect to the data sources the company already uses to run. So we'll connect to your Shopify or your Stripe or your Google and Facebook. And we use that data to get this 360 view about how your business is performing, which we can also share with you. And off the back of it, we can actually make a data-driven, but also unbiased decision, right? Because so much of the problem of what's happening in the current capital markets, or what I think a lot of people complain about venture capital, is that there's real inequalities in equity, right? It's 99% of funding typically goes to men, and often not from the most diverse backgrounds. And so this new model of working is also just really data driven, and means that I think you can get capital to a much wider group of people.
There's like discrimination or something on that level
in venture capital?
Yeah,
well, is it outright discrimination, or is it more about pattern matching? So, I think what's happening is it's more of like a systemic kind of discrimination, right? That often the folks who do get venture capital are people who have the introductions, or have, a rich uncle or a friend that can connect them to that world.
Wow.
And if you look at who VCs are, they're not necessarily the most diverse people. That's changing, and there's been, big strides that's happening in that. But, that space historically hasn't deployed very much capital to very diverse founders.
Wow, that's an interesting perspective. I mean, you've been insider on this for almost 20 years, right? Was in different kind of roles.
Yeah, absolutely.
Hey guys, people have been asking me how we scale to multiple 6 figures or even 7 figures per month without getting shut down on Facebook. And we have a very sophisticated solution for this that I want to share with you, but it's just too valuable to give away for free. So if you guys want this solution, just book a call with one of my team members and we'll show you exactly what it is and how it works, and we'll see if that's a good fit for you and for your business. So just book a call with my team member. We'll share it with you so you can scale your business to multiple 6 figures or even 7 figures per month without getting shut down on Facebook, without having inconsistency, and with high profitability. So just book a call with my team and I'll see you there.
Do you think this rate that you currently have 6%, do you think it will increase to some extra percent to compensate for obviously your risk and what FAT has increased?
Well, I think what's interesting is that as interest rates rise, obviously it creates challenges for every young business. And just to explain that a little bit is because obviously if interest rates increase, it means that, when some analyst out there is assessing a very large company, a very large tech stock, and they plug in their discounted cash flow model and they have to plug in, the interest rate, they have to put in a higher number. And so therefore that means that that company is valued less. And therefore there's a trickle down effect to every company where, if this big company is worth less, now all these other companies that are smaller must also be worth a little bit less than that. There's also pressure on, companies to be able to access capital because yes, traditional banks are going to put up their interest rates, right? And so the cost of borrowing is going to become higher across the market. But the interesting thing about a business like ours, we're newer in this market. We've existed for about almost 3 years now. And our growth has really come in this very exponential way of, I think, founders realizing there's a better way, there's another alternative. But the biggest challenge for us is actually less about the cost of the capital, and it's more about the acquisition costs of customers. So while an interest rate might go up and that makes some impact to our costs and our business model, really the bigger thing I think benefits us is that there's going to be a whole new stream of companies, I think, who historically might have gone to venture capital, but now are going to be like, well, hey, since VCs aren't doing deals, they are more open to looking for alternative sources. And so my hope with that is going to, offset that. And in fact, I'm hoping that we're going to deploy more capital at better rates than ever.
That's awesome. That's awesome. So you mentioned that your company functions in you mentioned 24 different markets?
22.
How working with, let's say, like entrepreneurs in other countries or in the different markets, how do you see that for you? Like, is it like less competitive, more interesting, or more challenging because of the bureaucratic kind of like challenges?
I think, you're right that different markets are going to have different financial ecosystems. And because we do rely on data, that can make it more challenging. But what's also really interesting is that if you think about, even within, say the UK,
Yeah.
right, which is another major market for us, within the UK, if you compared an e-commerce business with a bricks and mortar store and how difficult it would be to assess either of them compared to what a UK business and a US business in e-commerce would be like. And actually what you find is that UK and US business in e-commerce have so much, the same about them because, the typical e-commerce business is using the same set of platforms, right? There's like 8 really common, tools and platforms that, every e-commerce business is like running on. And so that creates this great power. And as well, more than half of the businesses that we work with, have, intentions to be international, and they do that, within the first year. And so, them as a mentality, they're also thinking about this like on a global stage. And so working with them is, very transferable across markets. And then the rest, we have an amazing team who I think has really figured out how do you make different markets work? How do you work with different entrepreneurs? And, has managed to help us, scale in a lot of places.
That's awesome. So where do you see currently, like which markets do you see? Like, I mean, United States is probably has the most options, probably the most competitive. Like, do you see kind of like more potential expanding those like international markets with like less competition?
Well, as you said, I think there is more options for entrepreneurs in North America, and I think one of the things with Uncapped what we did is we were the first to launch what's called revenue-based finance. This product that we're talking about, in Europe, and part of that was because we really wanted to make sure that European entrepreneurs, had access to this capability, and so we've really been focusing a lot of our attention there. Though we do serve the U.S. as well now. And yeah, there is so much more growth. I think it's really exciting to see how the ecosystems across Europe are really developing. And I think one of the things that limited them previously was that, if you weren't based in, London, New York, or San Francisco,
Yeah.
You weren't in the same place where, the investors were. And so you were just it just made it so much harder to actually go and be able to build the relationship and get the capital. But with this process and the way that Uncapped works is it's a fully online process. So you can get 5 million of capital, never having met someone, and it's a beautiful thing because we're really relying on data to make the decisions. Not who you went to school with, and so that means that more entrepreneurs across markets who aren't in those big cities can access capital. And actually, more than 70% of the businesses we fund are not in a major center. And it's a democratization of capital that's starting to happen. And yeah, we're really proud that to be part of that.
Do you consider like your company as a bank? Like, is that some sort of like a bank, kind of just like more focused on one service, or it falls into different like category?
Well, a bank usually you describe as one that has the ability to hold deposits, as well as potentially the ability to lend capital. Right. And so a bank usually has those two kind of things. So in some ways we have some banking capabilities and, we use banking infrastructure, but we're not defined as a bank. It's also a regulated entity. So we work in a different way that lets us be more innovative and more flexible. When we first launched Uncapped, I remember one of the biggest challenges was everybody told us it was illegal to basically even offer a product like this, where basically you had a loan that didn't have an interest rate. Like that's just not allowed in like, English law. And so, we had to come up with this new terminology and, we got some of the best lawyers in the world to work on it so that we could actually think about it in a different way. And that's one of the funny things, right, about our world is so much of finance has been structured in these old ways. And, the challenge of actually building something new is how do you overcome that red tape and actually give people what they want? right? And the way I always thought about this product is like, what was the funding product that I wish I had? What were the terms that I wish existed? What's the
Mhm.
legal agreement I wish I signed? And not having to have a lawyer, hold your hand because you don't know what you're signing. So, we made things very simple with, our agreements, 6 pages written in plain English
Wow.
because it's written to be something that you can give to your friend. So, changes like that, have been a big part of, I think, what's made us successful.
That's awesome. So, what type of companies do you usually work with? What type of clients like make your best kind of like customers? I see a lot of success stories on the website. So, what do you think kind of like is similar between those? Is it type of the business, type of the founder? What do you think unites the best of them?
Well, Uncapped is great for you, if you've been generating sales for at least 6 months,
Hmm.
you're doing at least 10K of revenue per month, and you're growing. And our rationale behind that is that, at the point that you get to 10K of monthly sales, you have something that's not just side of desk anymore. When you're doing 10K of monthly sales, you can actually, probably afford to pay yourself, a
Hmm.
salary. And if you've been doing it for 6 months, you've shown that there's a history, right? This isn't a one-off thing that actually, you can build this and it's something that can scale. And that's
Hmm.
what we want to do. We really want to fund those businesses that now have the opportunity to, they're making some money, but they want to go further. And we can basically add more fuel to the fire without taking a piece of the pie. So, those are the general types of examples, but, the range of businesses has been really wide. So it's all types of online businesses, both bootstrapped and like venture backed.
Hmm.
And, there's some
So
definitely
even
like,
even
great
venture
case studies
even
about how
even
people have
even
used it.
venture backed businesses are coming to you like for extra capital.
Oh, absolutely. So yeah, you'll see on our website we have one case study
Uh
about a
huh.
company called Marshmallow,
Yeah.
and they're a very different type of business. But what they were able to do is by working with us, they saved 7.5 million in dilution, and they've
Wow.
actually now become a unicorn. So probably that number is like 5 or 10x what it was before. And the whole reason was that when they were doing their early rounds, they took a combination of equity and revenue-based finance from us,
Uh
which
huh.
meant that they had, more ownership of their business and therefore, just had so much less dilution. So 100%, it's been really cool that we're able to help create unicorns.
Wow. Do you do also like Amazon businesses, like FBA businesses?
Yeah, we do. So a lot of our customers are Amazon FP&A businesses, and that is obviously a really high growth category. And so, yeah, seeing more and more of that. We also,
Hmm.
work with some of the aggregators as well, supporting them with additional capital so that they can go and fund, more
Hmm.
acquisitions in that space. And so, yeah, we're kind of involved. We have our fingers in a lot of different pies, I guess they would say.
Awesome. So, how have you seen like companies deploy that capital effectively in most cases? Like,
Well, I'll give you an example. I think that one of our first customers was the sustainable fashion brand called
mhm.
Hedwin, and just like so many e-commerce entrepreneurs working in fashion, they were juggling their cash between inventory and marketing,
Yeah,
and
that's
they
it.
would
We,
basically have
we
to
have we have
wait for the
apparel brand.
current season.
We have apparel brand. We feel everything you're talking about. Like we know every pain, every pain.
Yeah, so it's a really common case where folks are just waiting for the current season to sell so that they can invest the returns in the next, right? And that really limits their growth. And maybe that's a little bit
Mhm.
of what you're experiencing. Well, and Alex and Anna, they're the incredibly savvy founders of Hedwin, and
Mhm.
they both came from finance backgrounds. So they looked at every option available. They looked at venture and venture debt, but really they wanted a more affordable option that can help them take it to the next level. And so, yeah, they end up signing up with an advance from us for 50K,
Mhm.
and they used it to increase their marketing.
Mhm.
And what was really incredible is that they got the funding at like the end of the year, and then in Q1 they saw their revenues grow 11,000% compared to the
Wow.
previous year. And
Wow.
so, yeah, it's amazing. Like when you take, the right founder with the right business and
Uh huh.
suddenly you give them access to the capital that they needed, they can actually achieve incredible things. And yeah, we love those stories, and we love to find more entrepreneurs who really have that opportunity. A business with great unit economics that just needed, more fuel to really be able to go to that next level. And so, yeah, we're looking for those. I think another one that's really interesting and has become much more common is founders who are dealing with supply chain challenges. Like, the number of times I've heard of talking to an entrepreneur who's in e-commerce, and you hear that they've had a container that is currently like stuck in the ocean somewhere, right? On these doubled supply chain lengths. And that means that they're just missing out on this opportunity. And so I think some entrepreneurs are actually now just starting to see that as an opportunity. So, one savvy entrepreneur we worked with, they basically negotiated to, double their inventory from their current supplier at a 10% discount. But what they did was they funded it, using Uncapped at a 6% fee, and then pocketed the difference. And they took something that was a challenge and a pain in their butt because they were missing out on this growth, and they actually made a profit out of it. And so I think, entrepreneurs who I think use capital in smart ways to really unlock opportunities, that's what it's really all about. And I think becoming more savvy with how you fund your business is the shift that generally is happening. Because previously, because we only had equity, and it's sort of like, if you only have a hammer, every problem is a nail, right? And so now I think more entrepreneurs are recognizing, hey, actually, there's more options than ever to fund your business, and taking advantage of that to actually, get much more growth.
That's awesome. So let's say client borrows from your platform. It's a 6%, and it's like kind of like it won't go up. Like it won't it's a standard percentage, correct?
Yeah, that's right. So it's a fixed fee. So right up front, how much you have to repay. So like, say for example, you wanted $100K to invest in marketing. We take back a fixed portion of your daily revenue, which might be like, say, 5 or 10%, until we got $106K back.
Wow.
So we're not taking any other fees. There's no other hidden costs. You're just paying the 6% flat fee. And because the repayments aren't tied to your revenue, if the business slows down, as a founder, you're also not caught out. The repayments just slow down. So yeah, I really believe it's the most affordable, flexible type of financing available to growth companies.
So how do people find your solution? Where do they apply? And what would be the next steps if they want to explore this?
Yeah, well, getting funding with Uncapped is quick and straightforward, and it's all done online. So, as I said, there's no credit checks or business plans required. The company just connects their existing sales and marketing accounts basically to our platform at weareuncapped.com. So you go to our website, you fill in a quick form, and then usually within 24 hours, we can present you with multiple offers, and you choose the amount of revenue that you want to share. The more that you share, the more capital that you can access. We'll never make you an offer, that we don't think that the business can afford. And as it goes, it's unlike a conventional loan, there are no fixed repayments. It really flexes with your business, and you repay it as you generate sales. So really, really easy to do. Knowing that you have another option in your back pocket, I think, is always really helpful, because more options are incredibly valuable. Even if you decide, hey, you actually prefer to raise funds a different way, it just gives you some negotiating power. Because one of the big pieces of advice that I so often have for entrepreneurs is that being able to understand how you would actually make this business work, even if you weren't able to raise money, is so powerful. Because knowing that, it removes the desperation and just makes you much more investable. Having that down really adds to your mindset, and I think really helps you win.
Wow, this is such a good piece of advice, guys. You can try out and apply for for Uncapped. See if it's anything that you think would help your business grow. And Asher, thank you so much for joining me today. It's been tremendous, and it's awesome to see companies like yours, bringing value in the market and, helping entrepreneurs to achieve their goals and dreams. So, awesome. Thank you for everything that you do.
Yeah, feel free also to reach out to me on LinkedIn as well. If you have a scaling online business and you're looking for funding or exec coaching, really happy to connect. Every week I'm putting out content about fundraising as well as lessons about how to scale your business.
Mm-hmm.
On the exec coaching side, I'm a little bit more limited on space. I usually have like a person a month that I kind of add to it. But
Uh-huh.
yeah, shoot me a message, and if it's a match, I would love to help. And yeah, really excited to hear about you and what you're building.
Awesome. Yeah. Thank you, Asher, for joining me today. Guys, I'll drop the link for Uncapped. You can try it out, see if it's makes sense for your business to do right now or maybe even in the future, but having access to that capital so you can expand, you can hire, you can spend money on marketing, on inventory, and just expand your business and scale it faster. So yeah, thank you so much for watching, Asher. Thank you so much for joining me today.